the housing market is not going to crash like 2008. And I want to go into it. I went over this a couple of days ago, but I want to touch on subprime loans and mortgage delinquencies or foreclosures. So in 2008, I think the whole initial cause was by the subprime mortgages that were available during that time period. And then when 2008 came around, that's when shit hit the fan, basically. So, article here on Investopedia is what is a subprime mortgage? A subprime mortgage is a mortgage that is issued to borrowers with lower credit ratings or more risk involved in their loan scenario. A prime conventional mortgage isn't offered because the lenders views the borrowers as having a greater than average risk of defaulting on the loan, meaning they have a lower credit score, maybe they have a higher debt to income limit, maybe they didn't put as much down, stuff like that. Subprime refers to the below average credit score of an individual taking out a mortgage, indicating that they might be a credit risk. Well, if you scroll down a little bit here with me, I highlighted this one. In 2008, the 2008 financial crisis has been blamed in large part on the proliferation of subprime mortgages offered to unqualified borrowers in the years leading up to the meltdown. So they were offering loans to borrowers that truly weren't able to pay back their mortgages. And this, in a large part, was interest-only loans. These were adjustable rate mortgages, and they were what the industry is now calling maybe predatory loans at that point in time, because they knew that the borrowers were going to have a very, very difficult time when the interest only on that part of the loan stopped and they had to pay principal on it, or on the adjustable rate mortgages, the rates adjusted so much to the high side that they couldn't afford the loan anymore. And that's what happened, and that's why the housing bubble burst in 2008. Here's an article by the Motley Fool, Subprime Mortgage Crisis of 2008, basically a beginner's guide. This was published in June of last year, and they talk about what it was, when it happened, but they kind of explain it more in detail in the aspect of institutions let out $600 billion in subprime mortgages, making up almost 1 out of every 4 mortgages. And that is 23% right here. That's how many subprime or not great mortgages that were out there at that time. So here in the same article, it says, what caused the subprime mortgage crisis? There were many different parties that deserved blame for the subprime mortgage crisis. It wasn't one group or individual that caused the crisis, but multiple players that focused on short-term gains. Financial institutions packaged up what they call mortgage-backed securities. They continue to repackage and sell them to investors who believe they are safe investments. They basically take up all of these subprime loans and sell them to an investor. Oh yeah, they're on homes. People are able to pay them back, and it's on mortgages, so they're relatively good investments. Well, that's where they got in trouble, because when the people couldn't pay them back, they defaulted on the mortgages. Hence, now the investors are not making enough money on them, not making any money on them, lost money on them, and now they're starting to go under. That's what caused the Great Recession, was these subprime loans that were taking place. The next item on the list is mortgage lenders, who improper lending practices played a large role in the crisis. Mortgage lenders relaxed their lending standards and gave loans to people who could not have gotten a loan in the first place, who should have not gotten a loan in the first place. They were greedy and handed out interest-only and adjustable rate mortgages that buyers were not able to repay. In other cases, some mortgage lenders even committed mortgage fraud by inflating borrowers' incomes so they qualify for a mortgage. It was not a good situation to be in if you were a borrower in that time frame, and that's why it happened to so many people. I wanted to show you this of what happened in 2008 and what caused 2008 compared to what's happening now. And in 2009, 2010, mortgage practices were reformed, the Dodd-Frank Act was enabled, the CFPB was put in place, and so since 2010, there's been such a restriction in lending, and you have to meet certain criteria to get a home loan. You can see that foreclosures up slightly from last year, but near record lows. This is what was happening. This is what was happening in 2003, 4, and 5. That was pretty much average foreclosures for those time frames. 7, 8, 9 went up drastically. Foreclosures still kept happening after that, after home prices dipped. But since 2012, 13, foreclosures have been on the decline. And it's been like that every single year since. Now we have a supply versus demand issue, and that's what's causing inflated home prices. So many buyers in the market can't handle it, and we have prices go up drastically. I'll touch more on that in the next video. Stay tuned for more. I hope this helps you clarify on the difference between what happened in the early 2000s to what's happening now, and we'll dive more into that in the next video. Thanks. Talk to you later. Bye.